Many of you enjoyed my top 2 high conviction stocks going into 2026. So I decided to discuss my top high growth stock going into 2026. It has over 23 to 25% on the upside in 2026 alone, with about 4 massive catalysts that could give you potentially much more than a 20 or 25% return in 2026. I'm going to talk about it in today's video, and I'm going to get in trouble because I own a lot of them. I own Hims, I own Robinhood, I own a few more, and I discussed some of them on YouTube, and it's hard to pick my favorite one. But based on so many catalysts that are coming for the company, I can't help but talk about the stock again. And this stock is SoFi. SoFi was trading at about $31, $32 a few weeks ago, now trading at $26 per share. And for me personally, under $25, SoFi is easy money. And it's getting pretty close to this level where the risk to reward setup is getting too good to ignore. And yes, I did trim SoFi at $31, $32, and I got called all kind of names, but I'm someone that believes in Warren Buffett's principle, which is being fearful when others are greedy and being greedy when others are fearful. I'm starting to see some pessimism in the market, and I think SoFi is starting to look very, very interesting. Now, SoFi is an amazing company. They grew their total members from 650,000 to 12.6 million members, and they're not even at 10% of the adult population in the United States that they can reach through their banking and investment and retirement and even insurance related product. So the TAM for this company and the runways are absolutely massive. Revenue growth for SoFi is re-accelerating again at 32%, much more than 26% in 2024 and 35% in 2023. You really don't see that very often. You tend to see a growth stock that decelerates in revenue over time, but this one is re-accelerating, which is really, really bullish going into 2026. Adjusted EBITDA margin is increasing again. Adjusted net income margin is about 15%. It was unprofitable 2 years ago, which is why, again, I want to talk about the dilution a little bit, because some of you might look at the dilution and tell me, SoFi is diluting shareholders. They don't care about shareholders. Dilution is crazy. Well, this is because the company was unprofitable, guys. Now the company is profitable. And if you look at the last few quarters, the dilution has not been too excessive. There was some dilution, about 8-9% on average, which could be still excessive, you could say. But the company is growing in earnings per share hundreds of percent, and they're delivering more of per share value than they're issuing. So I don't believe the dilution is as big of a deal as many people claim it to be. The company is expanding in a major way. They're copying Robinhood with a 3% IRA match and many different things. And I'm going to focus more on the catalyst, but I have to explain the business model. Now, my favorite part about SoFi is that within a few years, it will no longer be just a bank, you could say. A few years ago, it was 100% of a bank. They were taking 100% of the credit risk. But this is not the current business model of SoFi. Some of it is, but most of it is transitioning away from taking on the credit risk. Now, the way they do it is they are more of a, let's say, when a real estate agent connects a buyer with a seller, they get a commission. SoFi is doing the same thing. If you want a personal loan, you go on the SoFi platform. SoFi is not taking the credit risk. If you default, if you don't pay, if you don't make payments, if you make payments, SoFi doesn't care too much. SoFi is gonna connect you to another loan officer or someone else that's gonna hold the loan. SoFi will get an origination fee for hooking you up to the other company. Maybe it's Blue Owl Capital or another kind of an equity firm. And SoFi will get fees whenever you pay your payment every single month. So this is a much better business model, much more efficient than holding those loans on the balance sheet and taking on the credit risk. And this is why the company's margins are expanding. It's now 15%. It will likely head much more over time, by maybe 30-35%. I could easily see that on a net income margin basis for SoFi, which would be really, really amazing. Now, my favorite part in terms of the catalyst, and there's so many explosive catalysts going into 2026. The biggest one, which has happened a few days ago, is the NASDAQ is moving forward with 24/7 stock trading, expected to have 24-hour trading on weekdays by Q2. So it's going to happen in the second quarter quarter of 2026. This is going to be huge, guys, a game changer for SoFi and Robinhood. And I was surprised to see both of those stocks going down on the news. It's really funny how inefficient the market actually is. This is going to boost their revenues in a major, major way, especially for Robinhood, but even SoFi is going to be a game changer for the investment business of SoFi. For me personally, as an investor, I'm not a big fan of it, but I think it's going to cause investors to react more quickly, and it's going to give us more opportunities as long-term investors. But SoFi is also going to be making money, as SoFi is mostly the casino and people are gambling on the casino. And SoFi is going to collect those commissions through payment to order flow, which is how they do it. And I think that's really huge. And the stock was going down on the news, which I was very surprised to see. The second catalyst from the biggest bull ever, and then you can't even, his price target is like $700 next year or something crazy. But in terms of SoFi, it's expected to join the S&P 500. It's one of the few companies that have been on the list for a while and it still hasn't joined. MSTR is there on software, although they're not really a software company. And there's a few more names, but SoFi is ready to join the S&P. Could happen any day, could happen in January, could happen in March. We don't really know when it's going to happen, but that's going to be a huge catalyst for SoFi. And we can see what happened to Carvana after they joined the S&P 500. The stock went up 11% in one day. So this is a massive, massive catalyst, not just for the stock, but for the business itself as a bank being in the S&P 500 companies, in the largest 500 companies in America. That's going to give them more legitimacy, and it's just going to make things better for them in general. Another massive catalyst for 2026 is the CEO of SoFi, Anthony Noto, which he has a lot of, you could say, compensation based on a certain price target for SoFi stock that are expiring on May 28th of 2026. One of it is $35. He would get 74 million worth of shares. If SoFi maintains $35 for, I believe, 90 days or 60 days in total by May 28th of 2026. If it doesn't hit 35, Noto is not getting 74 million. If it hits $45 and it maintains it, Noto will get $95 million. So this is a massive incentive from the CEO to do his best to, increase the stock price and doing good things in terms of fundamentals and in terms of, the company in general. And he's a great CEO. I have nothing against him, but this is a massive incentive. And Charlie Munger says, show me the incentive and I will show you the outcome. And the incentive here is clear for Noto to get the stock price much, much higher. And if we get to $45, this is almost 90 or 95% from the current price in 1 year. And I would not be surprised if it ends up happening. Another massive catalyst for SoFi is interest rates coming down. They've been coming down recently. Now we're at 3.75. And this is a massive catalyst for SoFi, mainly for their home loan business. Many of you asked me, how can we bet on housing? Well, you could buy the home builders or you could buy Rocket Mortgage. But if you own SoFi, you're actually indirectly betting on origination. And SoFi has been originating a lot of home loans, and they've been expanding over time, despite mortgage rates being at 6.2 or 6.3%. Now, if they head to 5% next year or 5.5%, this is going to explode. And this is a massive tailwind for SoFi. Now, the main misunderstanding for SoFi is that they have massive revenues from net interest income. And if interest rates go down, the net interest income is going to drop. This is 100% true. But if you look at their business back in 2021, 2022, here in the blue, net interest income was much lower because interest rates were lower, but they had their non-interest income, which is mainly origination fees. It was higher than net income, or interest income. But now rates are higher and interest income is higher than non-interest income. But if interest rates go down, then the origination volumes, they will be originating more home loans, more student loans, more personal loans, more loans in general, because it would be more available, it would be more attractive. So then they balance themselves out. So interest rates going down isn't really bearish for SoFi, and it's not really bearish for Robinhood either. Now, in terms of the upside potential for next year, and you have to keep in mind that this is a CEO that has been under-promising and over-delivering since the company went public. If you look at the chart I could put up on the screen of how many times he beats the analyst estimates, it's unmatched. It's absolutely crazy. And I believe he's going to do it again. Now, for next year, he's expecting 55 cents to 80 cents for 2026. I believe the company will hit 80 cents based on their momentum, based on crypto coming in 2026, which is another catalyst that I haven't spoken about. I can easily see 80 cents in 2026. Now, if I take 80 cents, okay, and I time it by 40 times earnings, which I don't believe is excessive at all for the growth and for the margins of the company, I'm getting $32 per share. The current stock price is about $26 per share. So we divide it by 26. This is about 23% on the upside from here over the next, you could say, 6, 8 to 12 months. And there's many catalysts that could take it further, such as the S&P 500 inclusion, such as massive potential tailwinds from the NASDAQ going 24/7 and increasing a lot of their trading volumes, such as Noto doing whatever it takes for him to get the stock to $35 or $45, for him to get the compensation, and for us to benefit as shareholders, but also interest rates that will benefit SoFi's origination of home loans. And you also have crypto. I mean, when I look at the setup and how much I'm paying for the company, it's really one of the best setups in the market in terms of the growth stocks in general. So I had to pick SoFi as my highest conviction growth stock going into 2026. And if it gets under $25, especially closer to $22, to me, that would be really attractive because the upside from 21, 22 is about 50% to 2026. So I would be aggressively adding more if it gets to this level. And if you're interested in knowing what I'm buying, what I'm selling, when I do anything, when I trimmed SoFi, when I add it back, I share everything I do in real time. And this is the link if you're interested. But thank you again for watching. It was not financial advice. So I hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.